Regaining leg strength isn't just about muscles. It's about reclaiming confidence, freedom, and the power to move through life without fear. For me, SCHG is more than just a ticker symbol. It's a philosophy, the backbone of my retirement plan and wealth-building approach. What if I could capture the best of American innovation with none of the guesswork and endless switching between stocks? In this age of relentless innovation, SCHG quietly defines trends while compounding my money behind the scenes, regardless of economic noise. So why focus on SCHG instead of the basic index funds like VOO or VTI? They are solid, but SCHG aligns with my vision for the future. First off, let's unpack what SCHG actually is. SCHG stands for the Schwab US Large Cap Growth ETF, tracking the Dow Jones US Large Cap Growth Total Stock Market Index. In plain English, that means I'm getting exposure to roughly 240 of the largest, fastest-growing companies in America, all in one move. There's no need to cherry-pick individual stocks. SCHG does the heavy lifting for me, automatically tilting toward companies with strong earnings growth. The big draw? This is a list dominated by names like Apple, Microsoft, Amazon, Nvidia, Alphabet, and Meta. When you invest in SCHG, you're not just buying stock in tech companies. You're buying access to the very heart of where the global economy is headed. SCHG is growth-focused and may be a little more volatile than your average index fund. But I'm willing to make that trade-off. I'm betting on innovation, disruption, and long-term transformation. SCHG allows for diversification while targeting growth potential. I love the low expense ratio at just 0.04%. It means more of my money stays invested and compounding. As a Schwab fund, SCHG integrates seamlessly into brokerage platforms, including fractional shares and automatic investing options. I see SCHG as a smart, future-oriented strategy aligned with companies shaping tomorrow, without the need to time the market. I wanted rocket fuel for my portfolio, something that would maximize capital appreciation and deliver real, compounding growth. SCHG fit perfectly into that role. SCHG doesn't pay out much in dividends, under 1%. Instead, every cent is reinvested back into the business to drive innovation, share buybacks, and organic expansion. I'm not looking for regular dividend checks. I want to see my investment snowball, powered by companies investing in their own bright futures. SCHG has consistently outperformed broader market indices like the S&P 500 during bull markets and growth phases. It gives me instant exposure to the areas of the economy that are growing fastest and disrupting the status quo. It's like holding a basket of winners. Let's talk about the holdings for a minute, because this is where SCHG really flexes its muscle. The top companies in the fund are a who's who of global innovation: Microsoft, Apple, Nvidia, Amazon, and Alphabet. Microsoft leads in software while transforming the cloud and AI industries. Apple boasts an unmatched hardware ecosystem and strong brand loyalty. Nvidia supports AI and graphics infrastructure, while Amazon excels in e-commerce and logistics. Alphabet Google is the backbone of digital search, ads, YouTube, and AI. SCHG includes Tesla, Broadcom, Adobe, and Salesforce, all dominating their domains. By holding SCHG, I was automatically participating in American ingenuity at every level. And finally, the Go for Growth plan. 40% SCHD, 60% VTI. Lower starting income, but more long-term upside. Yield around 2.4%. You'd need closer to $1.75 million to hit your income goal. This setup is built for compounding beasts. You don't need $1.5 million sitting in your account right now. This is where time becomes your best friend. If I'm starting at 35 and giving myself a nice 30-year runway with an average return of around 7%, the math looks reasonable. For the cautious, play-it-safe version, I'd need to invest about $1,280 a month. For the just right version, that number bumps to $1,365 monthly. Feeling bold? Then around $1,450 monthly. If I wait until I'm 45, I'd need to invest between $2,850 and $3,300 monthly. If I push it off until I'm 50, I'd have to invest over $4,000 monthly. The quiet, compounding way that fees erode long-term wealth is often overlooked. High expense ratios or a slow drain on your wealth, causing damage like a market crash over decades. Whether through mutual funds, overpriced index funds, or robo-advisors, small fees add up over time. I looked into SCHD and saw its expense ratio at just 0.04%. That's $4 annually for every $10,000 invested. In contrast, many mutual funds charge over 1%, which may sound minimal, but it can be devastating long-term. That 1% fee leaches into your compounding returns, like termites in the foundation. Every crash in history has been followed by a recovery. If I stay consistent, I don't just survive the dips, I thrive after them. Here's what keeps me motivated. Progress markers. My first $10,000 invested. Then $100,000, where compounding wakes up. Followed by $500,000, halfway to freedom. Then, finally, $1 million, where passive income dreams become reality. Celebrate those milestones, not with a Ferrari, but maybe with a pizza. I've mapped out how to create $3,500 in monthly dividend income using SCHD and VTI, two simple ETFs. No timing the market, no crazy trading strategies, just time, consistency, and compound interest doing its thing. If you're serious about building your freedom fund, drop your age and strategy in the comments. Check out that video for a $5,000 dividend portfolio breakdown. Subscribe if you're into wealth building without the BS. I'll see you in the next one.